Okay, very good day to everyone. In today's video, I'm going to talk about the latest MES measures to support the local market. I'm going to run through all the latest measures one by one, and I'm going to tell you how we should feel about it if we're dividends investors. Okay? All right, a little bit of background. 4 days ago, before the video was created, so it should be about a week ago by the time this video comes out, MES completed the equities market review with further measures to improve the valuation of Singapore stocks. All right, so this is generally what our government, what MES is trying to do. They're trying to improve the valuations of the local stock market. Right, the local stock market has been cheap for many years, and like Japan and Korea, it's good to actually do something to actually improve valuations. And the STI has responded positively, rising from 3,800 points early this year to 4,005. So we can see that the measures have been immensely successful, and this video discusses the 4 latest measures announced as the reviews come to a close. So let's begin with the first one. The first one is SGX-NASDAQ dual listing bridge. All right. So with a single set of offering documents, a company can list on both the SGX and the NASDAQ. Very cool, right? I spend lots of money on lawyers to actually prepare these documents, and they find that, hey, if you get approved by the NASDAQ, you can also list in SGX. So hopefully that will encourage more companies to come to list in our local stock market. And obviously, it's not just simplifying the listing requirements. Trading liquidity is also provided by the various funds that are in place in Singapore. So there has to be a good pipeline of investors to do that. All right. This, however, applies only to companies that are over $2 billion in size. So it is a goal to make it easier for these technology and growth American stocks to list on SGX. Okay, it's not likely to excite dividends investors, but it can raise our profile eventually and improve valuation overall. Okay, so for people who are looking for dividends, yeah, maybe you say, these are tech stocks based on a narrative. Maybe I give it a miss. Okay, but overall, when more people are looking at Singapore, that's good for everyone. All right. The second measure is a little bit small. It is a $30 million value unlock package. This is to strengthen our local companies, to give them competence in corporate strategy, capital optimization, and investor relations. Imagine some kind of skills future fund for local companies. And they've got toolkits, outreach events, media engagements, enhanced research coverage. All right. And they also want to develop some best practices. They want an ecosystem and collaborate with the Singapore Institute of Directors. Okay, once again, this is not likely to excite dividends investors, but I think it can increase investment options indirectly over the long term. I mean, it's always good for local SMEs to be able to get more training so that they can optimize their capital, and then hopefully they'll be able to list in the local stock markets, even as a small cap stock. Because for all you know, the small cap stock might become a deep value stock or dividends kind of counter the folks in my community would be very much interested in. All right, so definitely not something that I'm very excited about. Is a $30 million package, but you never know. All right, this could be the catalyst of a lot of new local companies listing in SGX in the future. The third item is that MES has made the largest placement for the EQDP asset managers. All right, so $2.85 billion have been allocated to 6 fund managers. So this will provide liquidity and support for IPOs. It will uplift valuations of Singapore stocks, especially mid-cap counters. So if you're like me, you've been holding on to these stocks for many years, you will find that these stocks will go up in price, and you have your net worth increase. Okay. Now here's an interesting bit. The total allocation so far, 3.95 billion. Actually, there is still $1 billion left. But I'm actually very happy that MES has decided to postpone that deployment until the second quarter of 2026, because I think that our P ratio is already there, close to 14. So maybe we don't need any further stimulus, right? For stimulus, people need to happily invest in these funds, let their fund managers earn a little bit of money, and hopefully, with fund managers requiring research, it would overall bring in some positives to the people who already have money there. Not exactly a big piece of news, I would say. It might even be slightly negative because dividend investors rely on current yields. If the prices go up a lot because of some kind of stimulus, it means that you get less dividends, right? Your current yield goes down when price goes up. Okay, so this is the third piece of news. And the final piece of news is actually broken down into multiple points. And I'm surprised at actually how much work MES is doing in this area. So what they want is they want to enhance market infrastructure and trading efficiency. Okay, so they want to lower execution costs so that there are more market makers, and that's very important because if you like me, you want to invest in deep value stocks, which include stocks like global testing, the bid ask rate is very wide. So a lot of money is lost to illiquid stocks, right, in the Singapore stock market. So if you can give more support to market makers, you can lower execution costs. I know maybe in the future stocks like global testing would become cheaper to buy. All right, so that's very important for folks like us, deep value dividends kind of investors. The second is that they want to modernize the post-trade custody model. And one of the frustrations of investing in Singapore is, for example, I can't buy fractional shares. In the US, I can buy 0.01248 shares of Procter & Gamble, for example, right? I can't do that in Singapore. I can't get zero point 0.3 shares of DBS. So hopefully we will be able to see this, hopefully maybe next year or maybe the year after next year. All right. So that will allow sophisticated custodian brokers to come into Singapore and allow us to own fractional shares. Okay. And more importantly, for folks who are very committed to CDP like me, I want to know what happens to the CDP in the future. I am very concerned that if the CDP shuts down and we have to transfer our stocks to a custodian broker, then we need to look at the fees, right? So big question mark. I think they will find a way to protect the CDP investors, and they all involve senior citizens, right? People like my mom, with a decent amount of stocks in CDP. So that's also an area of concern for me. Okay, and I noticed these 2 points maybe aren't really mentioned in the mainstream media, but actually they're very, very important. And I want to see what happens next year. Next is they want to reduce the bought lot size from 100 to 10 for stocks trading above $10. And this is very consequential. For my program, my students may not come in with a lot of capital when they sign up for my program. So if somehow the students like to choose DBS in the final portfolio, the minimum position in DBS is 5,000 over dollars these days, right, for 100 shares. And that becomes a problem because I normally advise that my students allocate their portfolio in equal shares. So if you have $100,000 and there are 10 shares, you put $10,000 into each share, right? So for a student with $20,000 and we are going to buy 20 stocks, they can only put $1,000 into each stock. So DBS is sort of out of reach for many of my students. And I would tell them that, because there is a high correlation between DBS and OCBC, you just switch to OCBC, and then 100 shares would cost about $1,700, which is still too high, right? And so if you reduce the bought lot from 100 to 10, that's something which I'm very grateful about. And it allows my students to sort of nibble the big banks as well as some of the Jardine stocks that are also trading in the $20 to $30 range, right? So you need $2,000 to $3,000 to own, for example, Jardine, Cycle, and Carriage, right? So that's something that I really look forward to. This is very, very good news. Okay, and that sums up the 4 changes that we'll be seeing. I think overall it is good. Okay, with the equities market review complete, it is now all about execution in 2026. All right, I want to see what the new custody model looks like. Okay, I'll be following it very carefully. Okay, and Singapore will deliver. All right, hopefully without too much violence done to CDP itself. Okay, now at the moment, CDP is still needed to buy Singapore savings bonds, right? So you can't own Singapore savings bonds without CDP. All right, so just a reminder what we mean, right, when we want to look at this new custody model. And traditional brokerages, yeah, the boring ones, okay, DBS Vickers that use CDP, it's still required to operate these SRS accounts, right? So I still need him to trade on SRS. I can't use my interactive brokers to act on my SRS funds, okay? So all these things is something which I'm very excited about. Where if you have any insights to share or you have information that I don't have, you can comment on this channel, right? And there might not be a need to deploy the final $1 billion. We've deployed close to 4 billion so far. Valuations in Singapore are now very fair, neither too high nor too low. Why not keep the $1 billion in reserve and deploy it later, right? Deploy it later when the economy goes bad. Maybe um, when artificial intelligence crashes in the US, and Singapore is correlated with the US markets, the Singapore market valuation might drop back to about a P of 12 or 11 again. Then maybe you deploy the final $1 billion. Or you get the timing right. I don't really think that there is a need to do that. At the moment, when the video is being built, well, maybe things might change. Right. So with that, that's all for this video for today. If you like my content, subscribe to my channel. If you want to listen to my life story and figure out how the FIRE movement works, then sign up for my course preview. Google ERM intro, take the first link, and I'll see you for my next early retirement masterclass preview. And that's all I have for you. Thank you very much.